Wall Street making muted moves yet again Tuesday afternoon, despite the heightened tensions in the Middle East. So what does all this low volatility mean for investors in terms of returns? Well, let's ask Nick Collis. He is co-founder of DataTrek Research. And Nick, before we get to your research on, just wanted to ask you, the markets have been making rather limited moves, taking the U.S. airstrike in Iraq rather in stride. Why do you think that's the case?
It has been the case for quite a while. We've been in a very low volatility regime now for several years, and the chief reason is Federal Reserve policy. It's been very clear the Federal Reserve wants to keep the expansion going, has been very accommodative on rates and with its balance sheet. And so that's the central reason. This is very unlike the 1990s, where you'd have 1% rallies every day for a week. This is not that kind of market. It's a slow melt-up market, but it's been that way for several years. This is just a continuation of that.
So, Nick, what's the implications for investors in terms of returns when you're in this low vol environment as opposed to high volatility?
It is very tempting to think, oh my God, the market's missing something. We're sleepwalking past the graveyard, and one day we're going to wake up and everything's going to be horrible. It's not the way it works. The market understands the risks. It understands what could happen, but at the same time, it also understands Fed policies on our side. Corporate profits are still very high. The U.S. economy is still fairly strong, and it would take a really outsized oil shock, very high oil prices very quickly to really damage any part of that story. So take it in stride, understand the market, understands what's going on, and it's not the sign that we're all just sleepwalking past a great big problem.
Is it good for returns?
It is generally good for returns. The correlation between returns and volatility is inverse. So the lower the volatility, the higher returns tend to be. And again, that's counterintuitive, but it's actually the way it works.
And how much longer do you think this low volatility environment can last?
Certainly through this year, because the Federal Reserve has said they are on the sidelines this year with rates being quite low. And it's kind of cheap to say it's a one-factor model, but that has been what's the driving issue. On top of that, the U.S. economy is still good. All the other things that we've talked about are still in place. Even the election should not make volatility all that much higher than it is today.
Well, Nick, going on the other end, one area that certainly is not low volatility is pot stocks.
Yeah.
I mean, last year, I remember the first few months, they just shot up and just plummeted down throughout the rest of the year, possibly because of some of the legislative setbacks we saw in some of the big states.
Right.
Looking at this year, are there any catalysts to move them?
Yeah, my partner Jessica Rabe, the co-founder of DataTrek, does a ton of work on this topic, and she's come up with a basic schema that I think makes a lot of sense. The downdraft that we saw in the fourth quarter of last year was really tax loss selling. There weren't many stocks that were down 30, 40%. The pot stocks were. They got sold at year end. They should get a bounce in the first couple of weeks of 2020. Now that selling is done. If they don't, big warning sign, because that means they're really fundamentally flawed and they're not going to rally anymore, but we're pretty confident they will. The next thing is looking at the elections and what's going to happen with legalization. Jessica's point of view is very strongly, if you don't believe legal marijuana is coming nationwide in the next 5 years, don't own this group, because you need to believe that in order to believe the market's going to scale to the size these stocks need to really work.
If you're still interested in investing in pot stocks, what's the way to go? Here we were talking about volatility.
Yeah, for us, ETFs are the only way to go. The single stocks got a lot of press last year as they were ripping, as you pointed out. But at the same time, we saw the downside of that when they all fell apart. So we strongly recommend people look at the ETFs in the space more than the single stocks. It's not going to totally eliminate volatility, but it'll dampen it with a bit of a portfolio effect.
Okay, so in short, low volatility, good returns for the market. For pot stocks, better to go with ETFs than stocks.
Yeah, there's only so much volatility any one human can take.
All right, yeah. All right, thanks a lot, Nick, for your thoughts. All right, thanks to Nick Collis of DataTrek Research. I'm Fred Katayama, and this is Reuters.